All right, so this trade was Asia session yesterday, but I'm gonna upload it as today just because on the P&L calendar and then the actual day, it was the 16th. So obviously going to this trade, I was looking bearish. What were my reasons for that? Over here, we have equal lows. We actually have three equal lows right here. So we have relative equal lows and we have exact equal lows right here. So that's a clear target when you're looking for shorts. And then obviously, going into today, we take out lows here, and then continuing onward at 10 a.m. we completely just take out equal lows here with this massive candle down. So first of all, right, obviously we have just a we're trending bearish. We have a couple moves up here, but we do place high resistance liquidity up here, and then we continue lower. So we have this move here, it plants a new high, and then obviously we see that it doesn't take out this high, so we form a lower high, and then we get a lower low here, so we're clearly in the downtrend, and then we get more high resistance liquidity here. And what I was looking for when I entered the charts, or when I entered the market, right, I see this bearish fair value up in the 15-minute, and I see a couple other bearish PDRAs. So in the lower time frames, we have obviously this inversion here. So we have this fair value gap that got inverse here, and this is where I took my entry. So we have this inversion fair value gap, and I set my stop above the fair value gap here. So if you can see here on the 5-minute time frame, there is actually a fair value gap here. So obviously I'm looking for this fair value gap to support price lower, and yeah, so this gives me a tight stop, good risk reward, and we're targeting equal lows. So initially, right, I was targeting equal lows, but unfortunately, it did not trend all the way down there. So how do I identify what made me want to get out at 1 to 8? So first of all, right, we can see, big rejection candles here. We had a fair value gap here, but what made me not want to hold it through this fair value gap? Well, you want to lock in profits for that winning day. So, obviously, a big win would be nice, but, 1 to 8 is good. Locking in one of those winning days is amazing. And then, second of all, obviously not, a traditional ICT strategy, but if you have studied price action and you understand the Elliott wave theory, then you'd understand that when the market distributes in a certain direction, or when the market is trending, it tends to trend in 5 different waves. So there's wave 1 here, right? This first wave down, that's the first move that just gives you the direction. So the first move is what gives you the direction, and this is usually where you want to take your entry. So I see this first wave here, and I see that there's a bearish PDRA within this first wave. So you see this, there's a retracement here, right? Retracement here into this bearish PDRA within the first range. I take my entry from here, right? This is the low risk buy in a market maker sell model, and we continue lower into a second wave lower. And this second wave, right, creates bearish PDRAs continuing lower. We get a retracement up here, rejects to the upside, and then we continue lower. Generally, right, when you're looking at Elliott wave theory and when you're taking trades off of this, the third wave is going to be your largest. And what do we see here, which is us respecting this theory, right? We see this third huge wave down, right? We plant some bearish PDRAs within this third wave. We retrace back up to here, but we do not close above this high. We create more high resistance liquidity, preventing price from going to the upside, and then we continue lower, fourth wave, and then this is the fifth wave here. So fifth wave here, right, we see rejection at this level here. We retrace into this bearish fair value gap, and then we continue lower. But we see rejection from the same level. So these are equal lows here, right? We get equal lows here, and we see rejection from the same level. And, right, we see that price has put in a new higher high and a new higher low. So what does this indicate? This indicates a trend change. So I see price retrace back into this fair value gap. And, obviously I'm comfortable taking profits here. I take profits here. And, yeah, that was the 1 to 8 trade that I just took yesterday. I think that's 1 to 10. Oh, no, 1 to 8. 1 to 8, yeah. 1 to 8 was around right here. See a 128.5 restore word. So obviously trade management. After we crossed over this internal low on the 15-minute time frame. So obviously we have an internal low here, but I waited until this internal low here to move my stop loss to break even. So on the 15-minute, it's more clear. This is the 15-minute internal low that I waited to move my stop loss to move my stop loss to break even. But initially it was a 128 restore word trade. So yesterday's trade recap. I'm probably going to upload another video later going either over either fair value gaps or just another PD array. And yeah, that's today's trade recap.